Hello everyone and welcome to the July 2021 edition of the EPA Insights interview. And this is your chance to get the inside track from one of the industry's leading executives. This month I'm joined by someone who manages to stay ahead of the curve, but has also been around for absolutely ages. He was the CEO of the first e-money issuer in Europe and now CEO of the UK's most recent challenger bank. He will hate me for saying this as well, but he's really the founding father of the payments revolution in the UK. And despite his accent, he's very British in every other respect. So please welcome to share a little about himself and his thoughts on the world of payments, the CEO of Cashplus Bank, Rich Wagner. Hi, Rich.
Hello, Tony. Great to see you again. It's been a long time, and great to see everyone out there. And I look forward to the engagement with you over this session, because I do love talking about payments. And I appreciate your alluding to me as a founding father. I don't know if I've attained that particular accolade, but it's certainly better than some have called me the founding grandfather of payments, which actually does kind of get me riled up. But after 35 years of being in the space, I'm probably as excited as I was in my first job at Bank of America as a customer service advisor so many years ago. It really transformed my life, transformed what I did in my career, and really excited and to talk about that history and the future of payments with another guru of the session being yourself, Tony, and I look forward to the session going forward.
You flatter me. I'd never pretend to be a guru. I'm a good questioner, though. So we're going to start off by the thing that I think you're well known for. You're known for shaking the tree and challenging the status quo, and that takes energy and it demands passion and enthusiasm. What is it that continues to motivate you about this industry, so many years after starting out?
Well, there's so many different aspects of payments that you can get into. And so there's been so many success stories around niche areas of payments that still drive people's interest, drives people's ability to change perceptions in the industry and change for the betterment the end product, financial services product, which seems to be quite a boring type of the sector, but doing it now in a digital transformational way, leveraging data, AI, and all those wonderful terminologies, but something that really, by using it, really has transformed the ease and use of banking for many of us today, and certainly creates a foundation to create far greater innovation over the next 20 years that we've seen even in the last 20 years.
Yeah, it's kind of a cool place to be too, isn't it? It bizarrely, it's become the sexy kind of hip part of fintech and the place that's going places. So it's really exciting as well. So look, let's talk about something that's often very sensitive. You've been involved with, you raised money at the beginning of Cashplus. You used it over the years, and you encountered something after a short period of time, which I'd call the P word. We don't often talk about profit. And many fintechs and challengers seem to be ahead of the seem to be built on the promise of an enhanced valuation at the next round rather than making a profit. Surely it's okay to do that. How would you challenge that approach?
Well, yeah, I someone may prove me wrong maybe 50 years from now. Certainly this environment has allowed a very strange, in my view, productive objectives for management. I mean, management has been rewarded for customer growth at any cost, and got valuations greater than they did before, even though their losses went from 5 million to negative 25 to negative 50, and something I just could not understand. I've been in the industry long enough that things kind of right size themselves in more logical manifestations. And so I certainly have believed that to be the case. I think this little bubble has gone on far more than I've thought that it would. And congratulations and kudos to all the individuals that have been rewarded by taking that model. But I come from an old school mentality that you need to be good to customers. You need to provide a fair and a product to those customers that have a need and that is solving a problem. And you should be rewarded for that on a fair and reasonable basis so that it's a good outcome for the customer and a good outcome for the shareholder. And I say that, the profit word being a bad word among many of the fintechs, but the shareholder is in the long term going to need to see a return on their investment. And to do that, you need to create a viable business proposition that ends up being good for the customer, good for the shareholder, and hopefully good for the industry. And that's something that I've really aspired to over the last 30 years, and certainly in my last 16 years at Cashplus, is create something good for the customer, create something good for the industry, but make sure the shareholder is rewarded for that, and creating a sustainable business that's not just here for the next 2 years, but one like us that's been around for 16 years, and we can actually show to our customers that we're going to be around for the next 16 years, where I know, Tony, you and I know when we first started out with VPA, starting out so many years ago, a decade ago, certainly us, some of the players that we knew, respected, are no longer here.
But what's interesting, Rich, is in the US, of course, the mindset around let's just throw some money at it and hope some of it sticks is really there. It's harder over here. Why did you move to the UK?
I think hey, there's certainly an adage within the UK, and I would say this is probably a good testament around fintech, UK being the fintech capital of the world. And certainly even my investor director, he has seen our development over time, sitting in Silicon Valley in the US, kind of watching our development, watching what's happening. He sees the US biased view of the industry, and he will say the UK is the fintech capital of the world. And he's amazed about this, and he looks at it, size of transactions, number of unicorns. They're here. It's great. It's fantastic. I mean, I'm amazed. I mean, you hear my American accent, but I'm British through and through because it's amazing to see how large the US is and the wherewithal and the money that the US has to deploy. And still people are talking about the UK, even post-Brexit, as a epicenter for innovation in the fintech industry, which I think is just a great testament to all the great people that work here and all the great leaders and innovators that actually start businesses here.
Yeah, and I wonder whether it's actually going to be enhanced as a result of being outside the EU rather than not. I noticed that EAM just this week has said the UK after San Francisco, or London after San Francisco, is the leading fintech city. I think there's a whole issue about whether the UK is creating this wonderful ecosystem of several different centres, Edinburgh and Bristol and Manchester, who actually collectively are even stronger than just one city like San Francisco, being at the top. So, but look, you've seen a lot of change. Any, a couple of highlights of things that you've seen and noticed that have changed?
Well, I think if you use kind of like the D words, digital and data has really transformed people's businesses. Come on, I can go and speed, the instantaneous gratification of individuals today. So let's take digital, for example. Helped run in the US, in the UK, a large issuer of credit products, credit cards. Very much a process where you send out a direct mail piece, you get back a physical piece of mail, you process that mail through a data entry clerk, and the person actually gets a credit card. It was highly efficient. The cost infrastructure for that was extremely efficient. It made it a very profitable type enterprise. But fast forward that 20 years. Well, I'm actually on ClearScore. I'm on an electronic, comparison site. The person clicks pre-approved because I've got the data to make that decision, the customer experience. I've got the ability to have the information about that customer already, so they don't have to put in Rich Wagner. They can literally, it will be pre-populated form. They fill out the additional information. A 30, we used to call it a 30-second reply card, but actually, in the case of electronic, you can fill the stuff out in 7-8 seconds based on the incremental information you need and the enhanced CX and UX environments that people are providing these days. And guess what? In a matter of nanoseconds, you get an approval. And in many cases, people are redeploying and providing a virtual card all within that same journey. And that's done because technology has been enhanced. And I say enhanced from a standpoint of not just UX, the infrastructure to do that, and allowing individuals to deploy these bank grade type solutions using flexible, agile environments over time really has transformed for the customer, for the businesses, a way in which you are providing fast, simple, easy to use financial service products that can take seconds to get in your hands and use versus 20 years ago, which would take 7, 10, 30 days to actually transact a full transaction end to end with the customer. That's
absolutely
very exciting.
It's extraordinary, isn't it? To see the change we've seen. So you've another area of change, which was quite interesting, because when I first met you, you were a dedicated and devoted e-money man.
Mm-hmm.
You could see the future was e-money, and we were I was totally convinced. And that all credit institutions are a different sort of world altogether, and who would ever want to be a bank? But when you got successful as an EMI, you decided to become a bank. What was going on there? Why was that? And what was it like to become one?
Well, there was probably 500 million reasons why, because we were able to build some critical mass. People trusted us with their money. And as we know with e-money, there was an inability to use your balance sheet like you can with a banking license. And so, yeah, I think we always had a mindset. Some people think that they need to be a bank right away. Well, if you look at some of the neo-challenger banks, they spend all the money to become a bank. We spent the same amount of money. You're not going to get a free lunch from the regulators, and that's a good thing. But they spent all this money to become a bank, and they really weren't using the banking license for what they needed to. And that's one of the reasons why many of these early banking entities specifically have lost a lot of money. Banking is very simple. And this is something I think Cashplus does differentiate itself. The concept of banking is 3 very simple concepts. It sounds complicated, but let me tell you what they are. They're very simple. Banks move money, store money, and lend money. Now, the first 2 items, storing and moving money, these neo-challenger banks got really good at. But unfortunately, in the free banking world of the UK, which is something that I am still upset at the UK for doing, and specifically Midland Bank for doing so many years ago, you're not going to make money simply offering a transactional banking account, such as a current account, certainly to personal consumers. There's certainly much greater money value proposition, a value pool for SMEs. But you need to create a lending solution in that to create the value associated with all the effort and all the energy and all the oversight and governance you need to upgrade so that you can get the regulatory permissions to get that done. And anybody that doesn't do those 3 things and do them well aren't going to succeed. They're not going to be profitable. And we've seen that. Banks have had neo-challenger banks that haven't done it now are actually getting into that. And that's where I think we will continue to go from strength to strength, because we do those 3 things extremely well. And we've been doing them for a long time.
But Rich, there was a time when I could pick up the phone, and we used to have offices about 100 meters away from each other. I could say, do you fancy a beer? And we'd go down to the George or to the Mudlark or something in London Bridge, and we'd have a jar. And then you disappeared. So we discovered that actually you decided to become a bank. And what was it like?
Well, yes, it was all consuming. I mean, literally my relationships with individuals in the networking world of payments, which I did enjoy, and I very much enjoy those beers. All that extra time went into becoming a bank, because it does take a lot of energy, a lot of work, a lot of time. And unfortunately, throw a pandemic on top of that, and you've got a real recipe for just a very intense period of my life where and my team, not just my life, I give a lot of credit to my team. They sacrificed greatly during a very difficult, a very challenging time. But as I kind of help motivate individuals through that period, man, do we have a rocking chair test. There are, you're going to count on maybe one hand the number of banks that were authorized during the pandemic. And we were one of them. And we're very proud of that fact. And, but it wasn't easy. If you ask me if I would do it again, not a chance. It was very much all consuming. But am I glad to be on the other side? That bank license is worth a lot. The value that it creates, the ability to communicate to our customers in a way that makes sense to them, using banking terms is another thing we can talk about, actually makes it simpler, easier for customers to actually take on and get these types of products going forward. I still love the fintech space. There's some great innovation that's happening. I mean, certainly I know you know Miles at Modular. I think some of the stuff that they are doing is quite innovative. There's a whole host of ecosystems out there that are driving forward innovation in a non-banking way, and I'm still a big fan of it. They can work in parallel together. I always felt that from the day one that we met to now that I'm on the dark side of being a bank. I think there's great collaborations because there are some really great payment innovations coming from people like us, Starlings, Monzos, and stuff that will make banking a better place to be, has made banking a better place to be, and will make banking even better in the future.
So you've always been somebody who's known for pushing the boundaries, and in fact, you certainly supported me and our community in pushing the boundaries when you were voted as the chair of the advisory board, which is now held by another senior banker at NatWest, of course, Marion King. What would you say you are most proud of achieving on behalf of the industry?
I think the two things I was really, and I really appreciate the opportunity to chair that your group. We were able, I think, to get a great team together there, and I'm immensely proud of basically how much stronger it's gotten that I've left. I mean, it's gone from strength to strength. That's good. So the things that I'm definitely most proud of, because I had the most ability to help you make some changes. Certainly in the area of diversity. You can hang your hat high. I started as chair of the EPA with no women. I mean, we didn't have one. And to move from that, and I know when I left, I do have it, when I talk to people, we had about 1/3 representation when I left after 3 years of women. And the best part of all is the deputy chair and the future chair after me was the first woman to take over the association for you. But I mean, think about the associations throughout the UK. You were a leader in that, and hopefully I played a small part in making that diversity agenda happen for associations in the UK. Really excited by that, because we do need to basically make that happen. And of course, my favorite, which I'm really, and this is an area where I knew that we were going to be a bank, but the direct access for non-banks. This was definitely an area where I think I hopefully played a part. And one of the main reasons I wanted to become chair of the EPA, because I had to lobby on behalf of the industry, not for Cashplus to be a non-bank participant, but for the industry, so the Bank of England, the regulators would understand the importance of leveling the playing field and allowing the likes of, TransferWise or Wise Now or Modular or all these individuals, and even, Cashplus was going to be one of the first 3 that were supposed to go on to the non-bank platform. And perversely, my desire to become a bank actually, unfortunately, made it much more complicated for the Bank of England to allow us to do that. And they requested politely, and I did agree that I would wait to become a direct member post becoming a bank. But it proved that I think the association EPA has an ability, when they put their mind to it, to make fundamental changes that will last decades, if not centuries into the future. And that part of being part of the EPA, part of the community, part of the industry is why, I think people need to become part of the ecosystem more than just being an executive within a payments firm or a bank.
That's very cool to hear that. Thank you, Rich. But we still have a few sacred cows or elephants in the room, things that we are kind of are a bit loath to talk about because they're a bit sensitive. Do you have any of those that you think sort of we should be out looking to put on our totem pole?
Yeah, well, I think we have an obligation to continue to educate the industry, and we need to continue to educate the regulators. We need to educate those in the ecosystem about the regulators, because I think when you get into banking, it takes, and not to put myself on a pedestal or my team on a pedestal, you just can't walk up to the PRA with 1 year of payment experience and tell the PRA you want to be a bank. Our team probably has about 100 years of combined experience among a team of about 10 people. I mean, the minimum amount of experience you need is about 10 years to become a bank. Whereas an e-money issuer, where you get a lot of innovation, a lot of great ideas are coming from people who are, as a user of the ecosystem, have figured out and solved a particular problem better than some of us industry veterans. Great. They come into this industry with this great idea, great innovation, but really don't have a understanding of even a level of governance specifically needed to run an EMI. And that's where I think the industry got in a little bit of trouble. And I'm going to say I'm happy to, whatever I tell you, I would tell the regulator. I think they got surprised by the lack of expertise that sits at an EMI. And I would say when I was, chair of the EPA, there were certainly members and non-members of the EPA that I would say were gold standard. They were really good. They had governance models. They knew what they were doing. But there were quite a few that didn't have a good grasp of what it takes to run a regulated entity. E-money is a great gift that the regulators have given us in the UK. They were the innovators right from the very beginning. And for Europe, the US does not have this EMI model. There's probably reasons why they don't. And certainly we've seen that, transpire over the last couple of years. Wildcard is not the elephant in the room. It was probably a good wake-up call, but certainly one that, again, requires greater education for the people that use the regulated entity and the regulators to understand it, because I do think, and I think you did a great job in calling out the regulator. The regulator really swung the pendulum too far. If they really knew EMIs, who would shut down multiple EMIs on the fourth Friday of the month? I mean, seriously. Yes. I mean, for a regulator who believes in good customer conduct and good customer outcomes, I would say it's not the regulator that failed. The industry failed the regulator because we did not educate them well enough to understand the ramifications of their decision, or help them, educate them to evolve their regulatory oversight of EMIs to make sure that they felt comfortable with those. Those are areas where we could throw the baby out of the bathwater and basically blame the regulator. I would take a different stance, and I say, you know what, the industry has a responsibility here, and we let down the regulator by not educating them and not educating our industry base on how important it is to be compliant, safeguard funds, and provide a governance structure that is robust, that makes the regulator feel comfortable about the industry that they are regulating.
I think it's a very sound criticism, and it's one that we are doing our best to ensure cannot be put to our door in the future, because working closely across the multiple regulators, and you're now regulated by both the FCA and the PRA, aren't you? And so the changes that you'd like to see around how we're regulated in the UK are relating to, yes, upskilling the regulators, upskilling our ability to keep them smart. What other things?
Well, yeah, I think I think there needs to be a common platform for both. A good conduct outcome, whether it's a bank current account or a cryptocurrency e-wallet virtual account, is really the same thing. So whether I'm regulated as a dual entity as a bank or an early adopting EMI is regulated solely at the FCA, we still have a similar shared goal with the regulator to create a good outcome for that end customer, both from an oversight governance and also a customer experience perspective. We can, make that better. Now, 20 years ago, when I came here and when I set up, an EMI, I remember the early regulations. They were going to do it at €100,000 entry price, 100,000 euros capital requirement, minimum capital requirement to get into becoming an e-money licensed bank. It ultimately ended at 350,000 euros. But I was screaming at the top of my head going, no, make it more expensive. It's kind of weird. I'm saying I'd like entry. You want to create a level playing field. But at some point, you do need to create some sort of threshold to ensure people know that this is a serious thing. And I know you've done a number of dinners when we were able to have dinners. And I think the point we were trying to make to the regulator is that these people need to know that it's serious. And you know what? First time I would say this is the regulator's fees were not commensurate with the amount of regulation and oversight they needed to provide. And I remember David Parker was at one of the meetings, and I totally concurred with him. Usually I don't, but in this case I did. The fact is you should charge more to oversee an EMI, because if you did and you had the resources, you would understand the industry more. And if you want a dark shout on the industry, it was the day that the regulator, and I was surprised as many of the industry, that the regulator felt it was so severe for Wildcard that they had to shut down every single program manager under that. There had to been a better solution, but it's a wake-up call for all of us to recognize it was a bad day in the industry.
I agree with you, Rich, and I also completely concur with the idea of charging the industry more to be regulated effectively, because then we get better regulation, more guidance and support from the regulator, and greater quality of compliance all around. So look, we're almost out of time. Sadly, we have no beers to finish off this. I'm sure we will soon one day. But a couple of final questions. Firstly, as a previous chair of the EPA's advisory board, where do you think the EPA should focus its efforts going forward?
This will be a short answer, because I think we spent a lot of things that are simple. Education. You guys do a fantastic job in networking already. It's a great organization to actually bring great ideas together. But I still think educating the regulator, educating the membership, educating the industry is something you guys do very well. And I think you need to continue to invest in that area, continuing and to make sure we don't have another wild card moment, both for those that and those that are program managers, and for the regulator, that if something like this happens again, the outcome isn't what happened previously. And I think you guys are well placed to make that happen.
We will do our best.
And my second one would probably, if I had to choose a new and innovative area, an area where, if you hear any of my interviews or panel sessions, it's an area where we're going to stay away from. And this is around education, but it's around cryptocurrency. There is a real strong use case for cryptocurrency, but it's shrouded in AML, financial crime, money laundering issues that we're knee deep into. That's a concern of the regulator. I know they have their consultation group going now, but it's an area where, just like a direct access was, 5 to 6 years ago, cryptocurrency, I think associations can play a really big part to really carve out a niche that, again, is good for the industry, good for customers, and understood by the regulator.
That's a really, really good bit of guidance, and thank you. We are cooking something in the background. We're pulling together a new sprint, focusing on creating a new entity that will enable organizations to use a settlement account at the Bank of England in the form of an omnibus account but run with stable coins. So we'll watch this space. We've got some stuff cooking.
Good.
Finally,
Good.
what would you say to a graduate who approached you thinking about following in your footsteps into banking and payments? What would your advice, your good words be of advice?
Well, find first. I always follow your heart, not your head, because you need to understand and have a passion with whatever you do. You think about, money will follow later. I'm still waiting for the money to follow, but money will follow later. If you are passionate about what you do, and I know you are quite passionate in what you do. Yeah. I'm very passionate. I love what I'm 16 years, 36 years in the industry. I wake up every morning excited, getting out of bed, turning on my computer and doing stuff. What I find so many people do, and I'm not saying I was perfect. I remember going to undergrad and basically didn't know what I wanted to be when I grew up. And so I chose, wait till you hear this, I chose to become a petroleum engineer. Now, the reason I did that, I did it because of my head. I looked into the stats and it said that a petroleum engineer gets paid the highest starting salary when you get out of university. That's why I chose it. I was terrible at chemistry. I was terrible at physics. I was terrible at a lot of things that would make a good petroleum engineer. So why did I go into it? That made no sense. Follow your heart, follow your passion would be my view. And from there, success will basically breathe in it. If it happens to be payments and banking that you're interested in, innovation within that sector, then fantastic. If it isn't, go find something. Go find another industry that you're passionate about. Follow your heart, not your head.
Brilliant advice, Rich. Thank you so much. You've clearly done that through your career. You've clearly shown the outcomes of that, which is great success. Your passion is infectious, and you're an inspiring guy. And thank you so much for sharing your insights with the EPA family on the EPA's Insights interview. Rich Wagner, CEO of Cashplus Bank. Thank you very much.
Thank you, Tony, for inviting me.